All right, everyone. Welcome back to another episode of 0x Research. This show is made possible thanks to our incredible sponsors, Chainalysis and Flipside. Today is December 21st, and we are recording a special episode here for you. It is our year-end 2022 in review, coming to you live with the Blockworks Research Analyst team. So we're joined here by the full team. We got Sam, myself, Matt, 0x Pibbles, and Westy. So we got a good episode for you. We're going to kind of highlight some of our favorite moments in 2022, and as well as hit on some still outstanding and remaining controversial topics that are kind of highlight where we are in 2022. So exciting episode coming at you today. Let's kind of start things off here with a 2022 Mount Rushmore of crypto. So let's try to do maybe your favorite moments, your greatest moments of the year as it pertains to crypto, and let's snake draft this thing. So Sam, why don't you kick us off, and then we'll wind all the way down through the team.
Yeah, for sure. I'm going to start with a pretty easy one, and I've talked about it probably the last 3 episodes, but Starbucks Odyssey. I am incredibly excited to take part in the journeys, earn some stamps. I think these Gen 1 stamps are actually going to be worth a lot of money once they get over to the secondary venues like OpenSea or One Planet. So yeah, I'm super excited about it. I go to Starbucks all the time. I think every single company in Web 2 is going to be watching it really closely because Starbucks is like the poster child for awards programs. They have one of the biggest, most successful ones out there. So very excited to partake in that event. And yeah, I'm looking to collect some stamps and hopefully win a trip to Costa Rica and see some coffee farms.
It's funny you keep saying partake because pretty sure you mentioned this morning that you have not been accepted in the beta program.
Yeah, that's correct. Pibbles got in and I didn't, even though I've probably spent $500 on Starbucks throughout 2022 at least. So a little bit salty there, Pibbles.
Yeah, I got it. It looks like a lot of work. So maybe I'll do it. I just don't want to watch those videos and take tests.
The cult of Starbucks is as legit as the cult of Bored Apes, so I definitely think they're gonna have a shit ton of value too, and something to keep an eye on and try to participate in if you can.
Yeah, it's definitely a good pick, and I mean it goes to show the power of the Polygon BD team, just one of a million projects building on Polygon this year. But yeah, I guess I'm next. So yeah, my first pick is the main characters of CT that were slain this year. And I'm sure you could have sort of a mini Rushmore within the Mount Rushmore of these characters. But yeah, I mean, the ones to highlight, the first one I want to highlight is one that I think a lot of people forgot because of all the craziness that went on later in the year. But the first one is Danielle Sesta, who was the founder of Wonderland Time, which was that Ohm fork that went crazy in 2021, as well as Spell, which is that CDP stablecoin. And was pretty active in the Phantom ecosystem. But yeah, earlier this year it came out that he was pretty close to Sifu, who was a pretty known criminal in the space. And yeah, just left a lot of his projects. And he was pretty outspoken in 2021. And yeah, we haven't heard from him in the past 10 months or so. So yeah, and then the others were obviously Kwon, who was probably one of the funniest Twitter accounts earlier this year. Even if you hated the guy, he had some great comebacks. But yeah, he got a little too cocky, and then obviously Terra had its death spiral. So that was another big one. Suzu, unfortunately, the super cycle did not happen. But yeah, he was definitely a big voice, a big shiller of all L1s, and yeah, he definitely got slain this year after 3AC blew up. And then yeah, the final main character was obviously Sam Bankman-Fried, who has been arrested over the past week. So yeah, just wanted to highlight the main characters that are no longer with us.
What do you guys think the odds are that one of those 4 villains that has been slain actually has a big presence on CT on an Anon? Do you think that's likely or very unlikely?
Sifu is definitely still around. I'm almost 100% sure it would make total sense. I still see him participating in rounds every once in a while. And it's almost a bullish sign to some investors, which is pretty crazy. I'm sure. And one person you didn't mention that I think is interesting, and maybe not a villain, but just Andre Krani, and he's gone. So there's been a lot of people that just disappeared off CT this year, and I'm sure they're still around on Anons, like Sam was getting at.
Well, Sifu is actually still here. He launched that Radiant Lending Ponzi, made a ton of money off of that. He's got his Sifu Vision token, which represents claim on a treasury that he's bleeding out on. And I think he's got one more grift project that is going to launch Omni-Chain. And then you also have Andre, who is back just scam pumping the lights out of Phantom the past like month. It's up almost like 3 times. So they're still here.
Pibbles, I think that brings it to you if you want to give your next Mount Rushmore face.
Yeah, one that left most of CT people really angry was the launch of ApeCoin in like April, May. Then you saw Bored Apes hit like 160 ETH floor. I mean, they were all going for above 6 figures USD. Then you had the other side land mint. They just kept winning. And I mean, all we had to do was buy a bunch of Bored Apes, chill out, and we would have out traded literally everyone. But I know none of us did that. And then they finally launched the ApeCoin staking this month. And then they hired the former CEO of Blizzard to lead Yuga Labs. So those were all huge moments for like something that everyone hated, but also one of the biggest wins of the entire year.
Yeah, I know Matt and I have talked about this a few times. Like, not even mad that I didn't get on BAYC, but to not buy like an MAYC at like 0.5 ETH or 1 ETH, however low they got, that was enough to actually piss me off. Like, I should have known better.
We made the same mistake over and over again. You know, faded Bored Apes at 2 ETH or whatever. Like, was interested in buying one, didn't buy one, and as they went up, you know, skipped out. Then Bored Ape Kennel Club came out, Mutant Apes, like, and we just kept skipping them, and they kept going up. And you know, at some point, it's just on us. It's like skipping out on dog coins, but I guess you could call it due diligence.
True. Good point. Yeah. I also agree. Like MAYC was easily I saw that just right when it minted and, you know, it was like, oh, I should buy this. Then you start justifying, like, is this really worth, you know, a couple $1,000s? Talk yourself out of it and talk yourself into immediate regret. But yeah, no, it's pretty hilarious. You mentioned the other side deeds. That single mint has like ruined any transaction fee chart for the rest of time. There was $227 million of transactions fees on was it May 1st when these minted, and that it's like 5x higher than any other day in history. And it's just because of like how many people tried to mint this at the exact same time, just totally blew out fees for hours on end. And then if you like ranked total transactions fees by block, you'd have to get into like the mid 300s before you get to a block that's not from May 1st because of this. It's just like pure comedy what this did to ETH transaction fees. But on the flip side, you know, that burned a shit ton of ETH that day, and there's no doubt about it.
Yeah, I'm sure some people thought that they could get the same returns on ApeCoin as you did the NFTs, and I mean, at what its high was $18, and now it's like $3.50. So I'm sure some people got burned on that, but yeah, for the most part, if you participated in the Bored Ape ecosystem, you're up pretty big.
Yeah, I guess that brings it to me to go next. And, you know, guys, I don't know how we didn't hit this one first, but come on, the ETH merge, that is forever ingrained in the, you know, etched in the side of the mountain for me. Really can't understate the ossification that really Ethereum as a whole went through, but mostly focused on the economic side of things. You know, emissions are down like 90% from the proof of work model. You know, it's taken millions and millions, probably approaching $1 billion of sell pressure through block rewards off the market, and that likely has a lot to do why we still haven't made lower lows versus the June numbers, like something when you compare to Bitcoin that has made newer lows. So you know, it really is easy to kind of like visualize what this has done for the network, and really excited to kind of see that going forward. And you know, when we do resume a bull market and more ETH is burned, like where is that inflation going to lie? And like if you look at the last 30 days annualized, we're at like 0.06% annual inflation, and I just think that's like crazy to visualize. You know, ETH wasn't super inflationary prior to this; it was around like 4 to 5%. But like being net neutral on supply as demand rapidly increases is a really exciting proposition.
Yeah, no question. I don't even think it was just one of the biggest events of 2022, but probably one of the biggest events in crypto's history. It's in the original white paper that Ethereum is supposed to be proof of stake. So watching it actually, achieve this energy efficiency, achieve the goals that it set out, become deflationary for periods of time, it's really amazing. And, it's interesting to see. I think it was Paxos, a crypto exchange today, actually delisted Ethereum, stating that proof of stake is not a valid way of securing a network. It's centralized. The power is in too few people's hands. So even though, personally, I love to see Ethereum achieve this milestone. It's kind of crazy to see that not everyone agrees with that. Probably, I guess I would say some Bitcoin maxis don't agree with that to take a stronger stance.
I mean, the biggest thing to me is just $1.4 billion of sell pressure has been taken off the market. And that's stuff that the miners would sell because they need to sell in order to incur their mining costs. So yeah, I mean, that's the biggest thing for me when it comes to the merge, which I think we all agree is probably the biggest event in 2022.
I guess it seems like a good time to take it to my next Mount Rushmore. Mine's actually negative. So I'm going to look at bridge hacks as something that should be ingrained in stone because it's something that we should not forget. There was $3 billion. And to put that in comparison, that's pretty similar to the market cap of Cosmos Atom token was stolen from DeFi this year, $3 billion. Out of that, 1.9 billion was from bridge hacks specifically. This data is thanks to Chainalysis, and I just want to say big shout out to them for being our sponsor and also something that I look towards regularly. Chainalysis has this great report on crime in crypto within 2022, and I'm super excited for the one to come out in 2023 to learn more about, specifically which bridges were hacked. Obviously I know BNB, Ronin, Harmony, just name a few, but it's gonna be super interesting to see them break it down and do their on-chain analysis of that. So big shout out to Chainalysis, and definitely should be ingrained in stone. Don't forget there is an inherent risk to using smart contracts and storing funds in DeFi, storing funds in bridges using this stuff. So, make sure you price that in. I'm not saying that it's less of a risk than using centralized exchanges, just that risk is there and should be noted.
Yeah, strong agree here, Matt. I just think bridges in general are going to be one of those things that we look back on in 5 years and think, I can't believe we were actually doing that. And I'm sure that's a controversial take. And that comes from a guy who is definitely a big supporter of the L3 settling to the L2 down to the L1 and kind of removing bridges. We had ZK Sync on last week or the week before, and just kind of hearing their vision of hyper bridges is something I'm super bullish on. You have the OP stack. I just think bridges are going to fade away slowly. And Matt, I know you disagree with me there, but that's definitely my take. And yeah, just to reaffirm your comments on Chainalysis, they're putting in incredible work. They're one of the best companies in the space, putting out tools that we actually need to legitimize our industry. So big shout out to them. They also have a lot of free research and courses on their website. So we'll be sure to link to that in the show notes.
Matt, you were at the end of the list, so we're snake drafting this one. Fire off another one.
So my next one is also negative, and don't worry, guys. I have the rest of my Mount Rushmores as positive things that happened in 2022, but I have 2 positive and 2 negative stored up. I believe we're going to do 4 maybe. Anyways, Tornado Cash. This is something, again, that we should never forget. It's had a huge effect on the industry. How did those people stealing money from DeFi bridges, how did they get those funds to safety? How did they clean it, turn it to cash? They probably use Tornado Cash or another mixer. And while this is decentralized smart contract technology, open source, anyone can use it. There's no owner or anything like that. It's really sad, but we've seen the dev, Alexei, he's actually still in jail. I'm not sure how many months later, call it 4 or 5 months later. And it's really unfortunate. Since then, 2/3 of the total blocks proposed on the Beacon chain have been censored, meaning have not included transactions to or from Tornado Cash as it was put on an OFAC list to not send funds to. And it's just a huge impact on our industry. Regulation is here. It's not regulation is coming. It's here. We're in the process of seeing it occur in real time. And it's just something that I think is, a huge milestone, a huge impact on 2022 and something that should not be forgotten.
Yeah, definitely agree with you. Yeah, write it down, everybody. Matt from Blockworks Research wants to etch the bad parts of our industry into the side of the mountain forever. But yeah, I know, I would definitely like to think code is speech and that you wouldn't get put in jail for something like this. But the reality is, there was billions of dollars washed through North Korean hackers. And if that's the case, if that is true, that's obviously going to piss off the United States government. So it's kind of the unfortunate truth of the matter. And, it's kind of yet to be seen what will happen. But it's in the government's hands, and that will tend to be a slow moving wheel. But to pivot to the second one of my favorite moments of 2022 for me personally was the launch of Canto. We were all watching that thing like a hawk, and actually, some of us were some of like the first people to bridge over on chain, like even before the dev team. Like we were that early when that bridge contract launched that we were the first ones jumping over there, and nothing will. I think we all have the similar feelings here, but like just blasting those funds over there, you're like, there's no way we get any of this back. And sure enough, Canto's still kicking. I would love to hear if any of y'all have similar thoughts on that.
Yeah, Canto was awesome. Seeing the devs slowly add liquidity to the pool before they tweeted about the launch, and no one was supposed to be over there, and there was like 5K in the pool, and watching it go from like 3 cents, and then like it peaked at like 80 cents. It's like a couple weeks later. It's pretty euphoric. Great chain, great tech. I'll be back.
Yeah, I can't believe Westy top ticked that chart twice. So if we were doing hot seat cool throne, I'd be throwing you in there, Westy, on the cool throne.
Yeah, it's definitely my best trade of the year. Probably the only positive trade I had this year, but appreciate it. Pibbles, you're up next.
Okay, my next Mount Rushmore moment is Solana and the Saga phone and XNFT backpack. And we didn't actually see any of this launch yet, but just the announcement of like a crypto native phone that's going to be like, I think it sold out. It was like $1,000. I think it's a big step forward for the entire ecosystem. Like being able to play a Solana native game like a Roy or something on an app on its own operating system on a phone that has like Phantom Wallet built into it is a huge step forward. And I just think it's a really creative way to push crypto forward. On top of that, they also implemented priority fees and had a hard fork in June. So the devs actually did something, and the network is functioning now. So it'll be super interesting to see how Solana moves forward from here.
Yeah, on the Solana phone, I mean, looking at how Apple's treated like crypto and NFTs, I know they basically tried to make Coinbase Wallet, like any users of it that are buying NFTs, to pay the like 30% fee that they usually charge on gas fees, which is impossible. And I think it shows that either like they don't understand crypto or that they do understand it and don't want it. And so it's good to have an alternative that won't sort of push their agenda or to try and take a cut of fees, and to allow like pure decentralization to happen. And so I think we sort of need that competition from the normal Apple and Android that we use today.
Yeah, I like the vision, but to be honest, I think it's dead in the water as soon as it launches. So I'll take the other side of that one. Definitely excited to see it moving forward, though. I guess I just don't believe in a Web3 company's ability to actually manufacture a phone at scale and establish like network effects like Android and Apple have. So it's an uphill battle, but I definitely like respect the hell out of Anatoly and the rest of the Solana Foundation for giving it a shot.
Yeah, I definitely hear you. I think there were only like a couple thousand people that ordered a Solana phone or pre-ordered. So yeah, adoption is going to be really tough, but I'm just glad that they're at least trying it. But yeah, for my next pick, I have Layer 2 adoption, which, yeah, I was really shocked to see just how much they were adopted this year despite the bear market. I mean, if you look at transaction fees and active addresses, they've basically been up and to the right, despite just as a whole crypto being less used. And I'm talking specifically about Arbitrum and Optimism, which I think combined have like 96% of the market share of TVL. But yeah, they've been doing extremely well. And yeah, I'm excited to see in 2023 how they evolve, like both of those networks as well as the new roll-ups we get. But yeah, I'm just shocked at how well they've done, and even the specific applications like GMX on Arbitrum that have done really well this year.
Yeah, I think L2 adoption has come a long way since the launch of Arbitrum, when people were bridging over there and the only option was to wait 7 days to get your funds back off of it. and we all just farmed Arba Neon, which was just like the Neon Cat, and it was just your classic on-chain Ponzi, and now they actually have real users and real dApps. So super cool to watch that mature.
I remember saying at the end of 2021 that I thought L2s were the sleeper of 2021, where the most development was happening, but it wasn't really getting narrative or a lot of attention. And I think we definitely did see that come true in 2022, where everyone hopped on board. And I got to say, it's still probably the thing I'm most excited about in 2023, to see even more adoption, to see even more development. So yeah, huge shout out to L2s, and can't wait to see what happens in 2023.
And if you want to learn more about L2s, we have a great dashboard built by Westy himself on Dune. Check it out, Blockworks Research Dune account.
Yeah, strong agree on that point, Westy. I think L2s have been one of the most exciting things, and it's crazy to think that even in 2023, you still have so many tokens for L2s to launch that it's hard to believe that it's not going to just continue to snowball. I guess like what I'm really curious about in 2023 is if optimistic rollups, considering that they have third-party bridges that can like get rid of that 7-day withdrawal period, if the user actually cares to use ZK rollups versus optimistic rollups. Like, you saw Polygon get so much great adoption, even though there was other EVM chains that got spun up. Like, I could easily see the same thing happening with Optimism and Arbitrum, where they kind of maintain their first mover advantage. So that's definitely something I'm going to be looking out for in 2023. But if I'm going on to my next Mount Rushmore face that I want to carve in, it's honestly just DeFi. And in order to kind of streamline this, I'll just hand it over to Westy to give his other Mount Rushmore face, because I know we're all going to agree on this point. But I just think it's really cool to see projects like THORChain. We just had chat on, last week. And they're providing like savers vaults, native asset swaps similar to a SEX. You've got margin indexes like GMX and GNS. Like, there's just so many tools that people can actually use to effectively trade with leverage, spot, etc., that I just think DeFi has come a long way despite the bear market, and I think that's just going to continue up and to the right going forward. Over to you, Westy.
Sam, I think you got one more pick since we're doing a snake draft here.
You're right. Okay. So for my second pick, and this is actually ironic because I just talked about how optimistic rollups might continue to see a lot of adoption despite ZK EVMs and stuff coming online. I would go with ZK tech advancements. I mean, we have Aztec, who is basically enabling privacy and DeFi, and they even raised $100 million throughout the bear market. You've got ZK Sync rolling out a $200 million raise in the middle of a bear market as they work on their ZK EVM. You got Polygon ZK EVM. You've got Scroll, Tycho, etc. The cost and hardware requirements to run a prover are going down, while proof generation speeds are actually improving. And then StarkX was massively successful with DYDX and Immutable X. Like, I think it was Vitalik who said, I thought this stuff was going to take 3, 4, 5 more years, and like it's advancing at such a rapid pace. So that's definitely what I want to carve in the side of the mountain here for 2022. I think it's kind of like a turning point. So really excited to watch it going forward, and I think it's just going to continue to pick up pace.
Yeah, strong agree on that one. Definitely excited for the ZK EVM specifically. Like you said, you're not sure if they'll be able to steal market share from Optimism and Arbitrum as first movers, but if they have the EVM implemented, then maybe the same applications can port over, and so you do see the same adoption. But yeah, definitely excited about those. But yeah, my next pick is MEV-Boost, which was essentially Flashbot's upgrade through proof of stake, where they changed MEV-Get to MEV-Boost. And it's been really cool to see a lot of people look into the data and actually care about the MEV being extracted, and looking at the sort of markets being created between builders, relays, validators, etc., and actually caring about sort of the censorship going on. And I know the first episode of 0x Research I was on to talk about MEV-Boost and basically explain what it was and how it works, and to look at the data. And there's a lot of concerns around censorship at the time, especially since 80% of the blocks went through Flashbot's relay. But at this point, especially the builders market has become way more competitive, with more builders beyond just Flashbots building high value blocks and getting those included. And so we're seeing in real time the censorship resistance of the Ethereum-based layer getting better over time. So yeah, it's been really cool to see over 2022 just that implementation and then seeing people iterate and get better over time.
It's pretty wild that, crypto is now this industry that's well known among everyone. We were on the front cover of the New York Times and Wall Street Journal in the past month, but MEV is a I'm not sure exactly what the numbers are, but multi-millions, if not tens of millions a month in value being extracted. That's still not really on the public's radar, I don't think. Obviously, we all spend a lot of time looking at MEV and the participants that are, both extracting it, helping mitigate it, or helping make it more efficient, send it back to, Ethereum holders, whatever it might be. But I think that that's still just an looked at space by the general public, and outside of the small niche of maybe a couple hundred or thousand people.
Yeah, even forget about the public, even within crypto, right? It's still such a technical field. You have to really understand how the chain operates, how to communicate with a blockchain, and how to be faster than other people at communicating with the blockchain in many cases. So it is even such a deep and technical area where even new research is still coming out, and then you have concepts like cross-chain MEV, what will that look like? And so, yeah, it's such an expanding place. And yeah, I agree, Matt. I feel like there's a lot of opportunity. If I was a builder, that's probably where I would be spending my time looking.
Pibbles, who's your next face?
My next face for Mount Rushmore, and this is kind of a two-tiered one, is Moonbirds and Limit Break / Digi Daigaku. The biggest thing about these were it was two different founders from more traditional Web 2 companies coming into crypto and launching projects that were either successful or temporarily successful. You saw Moonbirds, which was a public raffle, and you could mint it for 2 ETH back when ETH was $3,000 a pop. And you saw, I don't know who the hell was buying Moonbirds, but you see Ryan Carson launch this project, and then at one point the floor was 32 ETH per Moonbird, and the project had amassed $1 billion valuation, almost I think probably within the first 2 or 3 weeks. So that was a pretty big step just for crypto as an industry, that someone sees potential and comes in here and launches something so big, and people are willing to bet on it. Now, Moonbirds aren't doing so hot. I think they're at 17th floor. But it was a cool temporary burn. And then you also have Gabriel Ladon with Limit Break, which raised $200 million to build some sort of gaming application on crypto. And the biggest thing there is that the NFTs were free to mint, the Digidaigakus, and they basically went from free to, I want to say, $30,000-$40,000 a pop. So he also started diluting the Genesis holders via airdrops, but they just kept winning with those. I think Genesis holders have received maybe 8 airdrops, and a total Digi set is somewhere in the upper 5 figures, I would say. We still haven't even seen a game come out of Limit Break, but the guy built Game of War, which was super successful on iOS back in the day. And he's also doing a free mint on a Super Bowl commercial coming up next year. So that's just another example of someone betting bigly on crypto and really putting their money where their mouth is.
I don't know about you guys, but I'm already nervous for that Super Bowl commercial. Last year was the Coinbase one was the big one with the QR code that bounced around the screen, super easy to understand. This year, Gabriel's going to do something interesting. I don't know. It's going to have something to do with waifus, and I'm going to have to explain those to my friends. And I don't know, man. I'm nervous. I'm not going to lie.
I remember that Coinbase ad. All my friends, because that was, still kind of peak bull run territory. We're going oh my gosh, pull out your phones, free crypto. I can only imagine what this year is going to bring.
What a way that would be to to download some malicious software, random thought. But if you put a QR code on a screen that everybody's watching, everyone's scanning that shit. But I guess this kind of brings it to me for the next one. So next face I'm etching in is institutional adoption. That was a big one. I feel like that's been the narrative, right? Like everyone's been a Paul Revere. The institutions are coming. The institutions are coming. But this year it feels like we actually kind of saw that. So Sam already mentioned Starbucks, but even things on like the more financial side as well, right? Like JP Morgan forked and launched a protocol onto Polygon, and like they came out and said this and like talked about it, and we're like bragging about it. We were happy that they did this. So that's like this huge shift in sentiment that we've seen, especially coming from a large investment bank like that. And we've seen another narrative, kind of like funds in the forums, right? So you see like Golden Tree, their crypto divisions called like Golden Chain, huge activist investors in sushi, and you see like A16Z really pushing through, and like they're always putting in comments in the MakerDAO forums, and you really see that this like shift in investment style is like buy liquid tokens and try to like push your thoughts and beliefs into the ecosystem. And for like newer protocols, that can be really beneficial. Like maybe they need these like figureheads or leaders that can kind of like push for positive change. So it's pretty interesting to see not only like large Web2 companies, but also banks and investment based companies as well. Like investment firms really kind of push into this industry.
Huge agree. And like you said, not just institutions, Fortune 500 companies are here too. We're seeing Instagram and Twitter both support NFTs. Instagram's even using Arweave, like a pretty low cap, not very well known decentralized data storage provider. Lil Shell, we just came out with a report on them. But it's really crazy to see. It's not that the institutions are coming anymore. The institutions are here. Fortune 500 companies are here. Everyone has an eye on the industry. Wall Street Journal's writing about us. New York Times is writing about us. It's not small. We're not left out. We're not niche. This is a real industry. Everyone's watching.
The biggest thing for me was when JP Morgan, after the FTX collapse, very quickly said this was the fault of centralization, centralized institutions, not DeFi, which was really interesting coming from a big bank. That was the biggest thing for me to show, okay, the institutions are on board and they see what's going on here.
Dan's Mount Rushmore wall right now is Vitalik with the merge, the people of Republic of Canto, and then Jamie Dimon of JP Morgan. That is quite the collection you got going so far.
Nah, we're taking Jamie Dimon down and we're putting up what's JP Morgan's crypto arm? They have a name for it, but Jamie Dimon has said too many negative things. We're putting up JP Morgan's crypto arm.
All right, Matt, last two picks from you.
My last two picks are going to be AppChains and better tokenomics. For AppChains, yes, I want to shout out Cosmos specifically. We're seeing DYDX move there, which is by far the most successful decentralized application on a layer 2. We're seeing Circle create native USDC in the ecosystem. But even more than just Cosmos specifically, I'm giving application-specific blockchains a huge shout out here. I think that we're seeing builders find value in controlling the whole tech stack, and whether or not that's going to end up in, I think that we will see that continue for the foreseeable future. I hope that Cosmos is where they decide to build, in the Cosmos SDK with IBC compatible chains. But at the same time, Avalanche is actually releasing subnet communication soon. Who knows? For all we know, maybe Polkadot somehow could make a comeback and become relevant again. But I just want to give AppChains a huge shout out. And then real yield, better tokenomics. Actually, no, not real yield, better tokenomics. Ethereum just moved from basically a mechanism of value accrual where you were only hoping that people were going to want to stockpile it to use it in the network. All Ethereum that was being sent to the network before EIP 1559 a year and a half ago or whatever it was was going right back into the ecosystem. It was going to miners were selling it. There was nothing taking Ethereum out of the ecosystem besides speculators and those stockpiling it to use. But that's not a great value proposition when you really think about it, especially when you compare it to the burning mechanism that it now has. It's just incomparable. It's literally a deflationary network at times. And deflationary token at times. We're seeing the same thing with this real yield narrative where, people aren't just okay with some random buy and burn mechanism or something like that. They want actual stable coins coming back to them for holding an asset. So better tokenomics, 2022 is the year for it. I think developers got a little less worried about, maybe the SEC coming after them, or they were better being anonymous, or whatever it might have been. But better tokenomics are definitely going on my wall.
Yeah, I agree with both of those. And I want to hit on the AppChain one first. But before we do that, did I just hear a Polkadot shout out? What's next? Ripple and Cardano? I might have to duck. There's probably some hot comments coming for me after that. But yeah, on the AppChain thesis, I have a question for you guys. And maybe this is directed mostly at Sam and Westy, because I know you guys are the L3 view maxis. But okay, so the AppChain thesis makes a ton of sense to me. It broadens the design space for developers by including the validator set within the design space. What is the difference between like the Cosmos vision of a series of monolithic L1s that are connected via a communication protocol, in the case of Cosmos IBC, versus like multiple ZK EVMs that have L3 ecosystems built on top of them, but that like for that to work, like, right, there has to be that one piece of standardized code between them all, and that gives them the interoperability to communicate with the hyperbridges. But if that one piece never gets standardized, don't we just have a series of L3 ecosystems that have no cross-chain communication between the ecosystems, but they do within their own respective ecosystems? Like, what is the difference between that vision, where the piece of code never gets standardized, and the Cosmos vision?
So for me personally, I don't think there is too much difference. I think we're probably on the same page, and I think we've been talking past each other when we have these discussions. But yeah, I think a lot of the vision is pretty much the same, and I do think like IBC is a great way to communicate between blockchains, and I think like if we see app chains do well on sort of an L2 and L3 environment, it's going to look pretty similar to Cosmos. The thing that is the difference for me is that I don't quite see how the app chains on Cosmos have plans to scale beyond just their like monolithic chains themselves. And so when you have L2 and L3s, you have the ability to scale to billions of users if you wanted to, whereas Cosmos, like each chain sort of has to have their own vision of scaling, and then it becomes extremely complicated as each chain sort of chooses their own way to scale and still has to connect to IBC, and there's sort of a web of complexity there. Whereas with L3s, it's sort of pretty simple that you're all connected to the same circuit and all are essentially L2s and L3s. Like it's pretty simple and pretty clear. Whereas the Cosmos roadmap can get pretty complex, but overall, I think it's a pretty similar vision that like things are better when you have application specific blockchains, because you can have customization for your specific use case, but at the same time implementing some way to communicate with other application specific chains and send assets from one to the other. So yeah, it's pretty similar.
Yep, I would agree with everything Westy said, with the one caveat of, do you want to be secured by a bunch of fragmented validator sets with minimal market cap tokens, or ETH, the deflationary asset that everyone wants to hold, use? Like, I don't know. I just personally think there's no question, in my opinion, but we'll see how it plays out.
Yeah, no, those are great responses. And yeah, no, I agree. Like the monetary premium that ETH has the potential to accrue is pretty staggering when you see the number of individual wallets using it each month. And, there's like 30 some odd million transactions that happen each month. And it's just like interesting to think about, how much money people are really willing to pay to execute Ethereum transactions. It's exciting, honestly. But I guess that brings me to my last, fourth and final Mount Rushmore. And honestly, I'm going to go crypto data tools here. We've seen a huge increase in the data availability, and it's just super exciting for me to see, right? So if you think about like DeFi Llama, they have done such a great job of making broader market data available for free and do a very great job about being as accurate as possible. They're super responsive, so when things aren't accurate, they're quick to update it, which is just so exciting to see. And then you see things like Nansen and Arkham Intelligence, like really pushing the barrier on wallet tracking, and that sort of whole side of the thing, and like actually tracking more on-chain transactions. And then lastly, you have two companies like Flipside and Dune that are making the actual raw blockchain data available to analysts or anyone and in some cases for free. And that's just like super exciting to see. Huge fan of what they're doing, and that like really gives the credence to the whole notion of, the revolution will not be quarterly reported. Like, we actually now have the ability to track the health and profitability of every protocol that we all know and love on a block to block basis, and that is super, super exciting to me.
Yeah, man, wait till you see what we're building with it.
Redacted.
Pibbles, what you got?
This is my final face of Mount Rushmore. I think it's going to be LayerZero Labs and the launch of Stargate. That was a crazy moment earlier this year, and I think it happened right when the market had a little rally after everyone was scared shitless for a little while. So just seeing people be able to buy Stargate for I don't know, it was like 50, 60 cents, and then watching it go 5 times. It was pretty euphoric. It was a lot of people's make it all back trade. And then also just the launch of LayerZero Labs itself was kind of a game changer to bridge infrastructure. And we don't have a LayerZero network yet, but just the idea of having omni-chain dApps and omni-chain liquidity is just a totally new paradigm for everyone's experience on the blockchain. So looking forward to what they're going to do in 2023 and how this just improves every experience possible.
Yeah, I've been spending a lot of time looking at dApps building on top of Stargate, and the idea of cross-chain communication and cross-chain fund transfers, which is what LayerZero and Stargate respectively offer, is just absolutely amazing. Whether you're looking at Rage Trade, where you can use collateral from from many protocols across many different chains, or whether you're looking at Sushi X Swap, which lets you swap assets across chains. For instance, you could go straight from GMX on Arbitrum to ETH on ETH mainnet. It's just really cool to see, and this is all brand new. And then also LayerZero's investment round is one of the craziest I've ever seen. Just the names, every single fund that you've ever heard of, pretty much in crypto, is on that cap table. So pretty cool to see.
When LZ token? That's the real question. I think one of the most interesting things with LayerZero is that they had built this great concept that really opens the door to decentralization with their Oracle, and they have basically a 2 Oracle model where there's 2 systems that verify everything, and if one system fails, then the transaction will fail. But currently, it's still pretty centralized, just because the systems built on each Oracle are centralized. But that'll likely be abstracted away going forward. It's just a question of when. In the depths of a bear market, that's probably not a priority. But exciting to see them, and hopeful to see them continue building towards decentralization, as that's all obviously should really be at the forefront of their priority list.
Yeah, so for my last pick, I have Pseudo Season with Sudoswap. I don't know about you guys, but probably the funnest time of this year, besides top ticking Canto, was participating in Sudoswap when it was Pseudo Season. I think this was early August, when people were going crazy, basically buying any mint that was happening on Sudoswap and selling it after it pumped for a few days. And yeah, I think we haven't talked about Pseudo in a while, but it really is one of those innovations allowing essentially for an AMM for liquidity for NFTs. And I think it'll still thrive for certain NFTs, like we said, that are more fungible, that aren't really one-of-one pieces, but are sort of meant for more volume and more trading. And so I hope we get another Pseudo season once we get a bull run back, because that was definitely fun. But yeah, definitely had to go on my Mount Rushmore for this year.
Our Slack chat was popping off during that season. I remember I built that was one of the first more complicated SQL scripts I wrote, which was to track the pseudo factory pool to see which new pools were launching. I guess in hindsight, it would have been a lot easier just to turn on Etherscan notifications, but that was such a fun time.
Sudoswap.
One of the biggest things about Sudoswap for NFTs was the fact that royalties didn't have to get paid anymore. That was kind of the tip of the iceberg for the whole NFT debate that those guys are fighting over on Twitter every day. I mean, it was just awesome to like buy something and not have to immediately give up like 10% of my profits just for selling it.
Yeah, I totally forgot that Sudoswap was really the start of the whole, royalty debate, and that was, a big part of 2022 as well. Can NFTs have royalties? Is it a sustainable model for NFT creators? What are ways that creators can maybe mitigate people not paying the royalties, and just something that was an interesting conversation throughout the last 6 months.
Yeah, for my last face on the side of the mountain here, I'm going with a controversial one. I go with Kwon. I honestly think it's really good that UST failed, to be honest. I think it washed out like a lot of leverage that could have stuck around and survived the bear market had it not. Starting with 3AC, then going over to Celsius, then going over to FTX and Alameda, and then Genesis and DCG. So I'm glad that it happened. I also don't think Do Kwon had bad intentions, and that's the controversial part. I think that he was just trying to build something that was a little bit, actually not even just a little bit, really like way too early. Like I think eventually there could be an algo stable that people trust and believe in and aren't always like looking over their back to think, when do I need to cash out of this thing because everyone else is going to bank run at the same time. Maybe that future is like 20, 30 years down the line, but I do admire the idea of decentralized money, and I think it just was ahead of its time. But I do think we'll see the resurgence of that narrative way down the line when it becomes more needed and more imperative to the functioning of DeFi.
Yeah, I don't know about algo stable specifically. Maybe something like Frax that has part of it being algorithmic, but I do agree that decentralized stablecoins, especially like this year, that censorship was such a big narrative towards the end of the year with Tornado Cash and MEV-Boost. I think, yeah, it's definitely going to be a narrative within the next few years is how do we actually build a decentralized stablecoin that is scalable. And Terra was the best attempt at that so far, but obviously the model wasn't robust enough to survive a big bank run like it had. So yeah, I think while right now people I think are still sort of weary about decentralized stablecoins, eventually it's going to come back, and we're going to have smarter people building better models for that decentralized future.
Yeah, I guess the reality is it worked as intended, right? Like USTD pegged, Luna was sold to backstop the peg. I guess you could argue it didn't work really because I don't even think it's still restored the peg yet somehow. It's still like the third largest decentralized stablecoin, which is kind of interesting. But yeah, no, nonetheless, I think that's a pretty solid recap of the Mount Rushmore events. We hit like the highs and even the lows, sponsored by Matt's depressing Mount Rushmore. But I think net, I think we really hit the major events in crypto. So it's really exciting to see that. I feel like we've come a long way this year, and it was pretty exciting. But if we start pushing into the next portion of the episode, which we're going to kind of do our usual Flipside Dash review, this time we're actually not going to review a dashboard, but rather just one chart, and just kind of follows up from last week's episode where we had Chad Barraford on talking about the Savers vaults that the network has launched. Again, we're recording this episode on December 21st, so this is the most recent data as of just a few blocks ago when I updated this script powered by Flipside. That's a quick shout out to Flipside for, again, I feel like we keep showing a different part of their product every day, but their API is so damn easy to use. You literally just plug that thing straight into your Python script. Boom, data's in, no work needed. It's pretty nice to use like an effortless API like that. But if we look at the chart here, we have an analysis of THORChain's synth utilization. And if we remember from last week's episode, synths are really the backbone of the Savers program. And the Savers was launched in around early November, which is very obvious when you look at this chart, like where this massive spike comes in, smashes the new highs by about 100% and pushes up towards that synth utilization cap of 30%. And if you see here at the very end of this chart, we actually are poking over the utilization cap. And why that's possible is because once the 30% is hit, then no new synths can be minted. But if the balance of the pool shifts a little bit, then you can kind of like push a little bit over that 30%. But again, when utilization is over 30%, then no new synths can be minted. So this is like a clear definition of product market fit in my mind. There's over 1,000 unique savers in the vault. There's somewhere around $7 million that have been put in these vaults. Of course, Bitcoin's the most popular, but ETH is as well. And it's just really exciting to see like a new innovation get immediately adopted like this.
Dan with the low-key flex saying, I just updated this chart while we were all talking. I love it. No, that's great.
I was hoping you wouldn't pick up on that. But yeah, no, as always, we do. I feel like, Flipside's a sponsor of this podcast, but it is true. Like, I use it every day. I'm obsessed with it. Their data is great. They do a very good job of QAing the data within their tables. And if you want to get started on querying some of this data yourself and learning how to do that, they have some of the most comprehensive on-chain data there is in the industry. So definitely check it out. Best part about it is it's all free. You get full access to their entire product without having to pay for anything. And if you want to kind of like maybe answer a question or try to start pushing in a certain direction, then definitely be sure to check out the Flipside link in our show notes. We've got a little challenge for you to earn some USDC for yourself. So just check out this bounty, and yeah, you have the opportunity to play with some on-chain data yourself.
All right, now going into the next segment here, we've got some topics we want to just kind of banter about. First up, death of all L1s. What do you guys think?
Yeah, I think it's pretty interesting to see the contrast on sort of the multi-chain thesis from 2021 to 2022. I know even towards the end of 2021, it seemed like to everyone in the industry, it was pretty obvious that we were going to have a multi-chain future with multiple monolithic L1s. But obviously after the events of 2021, where I guess sort of the specific L1s that got adoption in 2021 sort of got burned. So you had Terra, which was one of the biggest L1s, and then you had the UST death spiral. You had Solana, which was heavily backed by Alameda and FTX, as well as the network going down a few times. And low sentiment there. And then Avalanche, 3AC was one of the biggest bidders and shillers of AVAX. And when they got wiped out, there was no one really left to be loud and bullish on the ecosystem. And you look at sort of their native tokens versus ETH, and they're down. I think each of those is down like 90%, with Luna down 99.9999%. With ETH down like I think 67%. So it goes to show that I guess ETH is outperforming, and maybe the L1 thesis is dead. And like we talked about earlier, L2s had a lot of adoption this year. Like gas was up and to the right, transactions up and to the right, whereas these all L1s all had their transactions, their activity basically down and to the right towards zero. And so yeah, it definitely brings up the question, is the all L1 thesis dead? I know we saw Aptos, which was pretty highly funded, and that launched towards the end of this year. And we haven't really seen anything come of it yet, which you would have expected if the all L1 thesis was intact. But yeah, I wonder if you guys have thoughts as well.
So let me take the other side of that. A month ago, I totally 100% confidence. I would have said it to anyone, like L1s are dead. All L1s are dead. Ethereum's going to be the winner. Then I started to think about it a little bit, and I was like, okay, well, normally when I feel that strongly about something, I need to take a step back and really, really analyze it. And then secondly, who are the sellers left, right? You already saw SBF blow up. Sure, that was the biggest proponent of Solana, and 3AC was the biggest proponent of Avalanche, but they're gone. They're washed from the ecosystem. So, are there really more sellers? And then I guess another thing would be there needs to be multiple different places for different types of projects to go when they're developing. And I think that that's kind of something that we're going to see for a long time, where maybe if you're a gaming chain, you're going to go one place, or if you're a DeFi chain, you're probably on Ethereum, but whatever. I think that there's a possibility where these L1s do succeed. So just taking a step back, like I'm going to fade myself and say that all L1s probably will come back, although not to the same extent. And I do think that Vance Specter had this theory that they were just super inflated, where like the L1s were outperforming ETH was a result of these different funds he says it was a result of FTX taking money from their accounts that should have been ETH and Bitcoin and putting it into Solana, Avalanche, take your pick. But while I do agree with that, I just think that that doesn't go to completely say that these L1s have no value and won't come back, and that there's not developers building there to make the ecosystems better and to
Yeah, I also echo that opinion. I think like sure, like if you're coming from like a tech maxi perspective, you're like, oh, L3s and like, ZK whatever. But I mean, the reality of that is a lot of that probably won't be ready in time for when somebody needs to use it. So like if you actually did start having these more traditional Fortune 500 companies come in and they realize that they need to be able to easily deploy something, or maybe they want to run a dApp on a chain. I mean, just because the token's price is down and all the sellers sold, the tech is still there. I mean, Avalanche, for example, like down only, but they still have subnets. They still have like some partnership with Deloitte. Like if Deloitte wanted to like build some custom dApps on a subnet and spin it up with their own validator set, I mean, that's still totally plausible. So I think that maybe in the short term, all L1s are still okay. And I mean, on a big enough timeline, if you have like all these companies and we're really supposed to have, the entire world using blockchain, I think all L1s will still have some sort of place there.
I feel like you were coming after me with that one, Pibbles. But yeah, I have to take devil's advocate on what you guys said. Like if you're trying to build on an EVM chain, why would you go to Avalanche C chain or to maybe an L2 on Solana? Why would you not just go to a ZK EVM or Optimism and Arbitrum? That's sort of my question. As well as, like you said, if someone wants a solution out of the box, like why would they not go to something that's already built? But I think you're underestimating how quickly these ZK EVM and ZK rollup teams are building. I think we already have baby alpha from ZK Sync, and we're going to get a lot of mainnets in Q1 and Q2 of next year. So I think it's probably coming a lot earlier than you think, and it's going to be ready to go. And so that's sort of the bearish take on them, given what you just said.
If I share my screen here real quick, we can see what the market thinks. And I just find this chart super, super interesting, looking at basically, every major L1, including Bitcoin. And you really see this division into two separate groups, right? You have Bitcoin, Ethereum, and Atom, and then AVAX, Near, Phantom, and Sol. It's just like you see the merge happened in early September, and that is like really where this divergence becomes very obvious. And then like again in the FTX collapse region in early November, it becomes like even more solidified that there really are two tiers to this investment class now. And if you look at like the beginning of the year, it's back and forth. You have tiers crossing over, you have assets moving everywhere, and then now we have again these just two clear divisions, which I find very interesting. But I think there is a legitimate point to be made that like if the tech is marginally better on an alt L1, why would you go there versus like something like Ethereum, where maybe the tech isn't fully baked out yet, and like we're really still working on building the scaling roadmap, but there are the users there. There are the people that actually trust the chain to transact in a certain way, and it'll be interesting to see like how those trade-offs get played out.
Agreed.
Yeah. I would just like to raise the point that like you saw something like Stepin get built on Solana. If they would have just deployed that to mainnet Ethereum, like the argument is, then I mean look at the other side land mint when they burnt like $227 million. Like if I'm trying to just claim my damn reward tokens for taking a walk, I'm not going to pay $120 for that transaction to go through. But it could be different in the future now that we have these L2s. It's just they themselves need really strong BD teams who are going to be able to give them an out-of-the-box package to get something deployed.
Yeah, for me, this argument comes down to two things. If you look at DeFi Llama's languages dashboard by TVL, it's like 98% are Ethereum native languages that are locking the value in DeFi. And then you see the crypto market caps, like ETH is what? Half of smart contract language market cap. So that just doesn't really add up to me, first of all. And then second of all, I don't think users have that much of a preference between transaction fees, between Arbitrum, Optimism, whatever other ETH2 versus a Solana where it's fractions of a penny. Like, I don't think that's there yet. I don't think people care to pay 1 or 5 cents versus 1/10 of a cent. I think it's mostly people in first world countries who are doing this stuff, as much as I hate to say it, because that's not the point of this industry. But yeah, I think there's just low preference for transaction fees in general. So that makes me think, maybe Ethereum should be prioritizing like account abstraction over something like 4844s, which makes it cheaper for L2s to settle on ETH1. But I mean, I'm not an all cores dev, so I'll leave that to the smarter people to decide.
And one other thing is, so the sort of Solana thesis was the ability to be composable with other applications. That was sort of the thesis of a monolithic chain, is that in order to have direct composability, you need to be built on the same chain. And so I think going forward, since we have things like IBC, where you can have direct communication between blockchains and not just on one single blockchain, as well as if you have L2s and L3s that are on the same circuit, and you can have bridges that aren't really bridges, like hyper bridges on ZK Sync, that essentially you can have composability without needing to be on a monolithic chain. And at that point, the network effects really begin to take over, because the more applications, the more liquidity that exists on these chains, the more likely that a new application is going to build in that chain and be able to directly plug into those other applications. I think, if these monolithic chains, especially with DeFi, want to survive, they need to really build up their network effects now for the next bull run, because I think it's going to become essentially winners beget winners, and the network effects are going to take over.
All right, I think we hit that one pretty hard. On to another controversial topic, Bitcoin and its longevity through its security model. Westy, I know you've got some words here, so I'll pass it over to you first.
Oh God, we're going to have some angry comments. And Dan already called out the Polkadot and Cardano crowd, and okay, now we're calling out the Bitcoin crowd. Yeah, I just think now's the time to start talking about Bitcoin's security model before it's too late, because in my opinion, it seems like this is the consensus view on crypto Twitter, which I didn't think was essentially Bitcoin's security model eventually isn't going to be sustainable, because eventually it'll need to rely on transaction fees as we get more and more halvenings of the block reward. And right now, Bitcoin as a network isn't really being used enough for the transaction fees to be meaningful. And if Bitcoin remains a store of value, that's going to remain the same, because people are just going to hoard their Bitcoin as opposed to use the network. And so I think now's the time to think about how do we make Bitcoin as a network more sustainable going forward. And I know it's a tough conversation to have, and some people are really hesitant to change anything about Bitcoin, which is sort of what's made it so great so far. But in my opinion, I think something needs to change. Either that's the inflation schedule, the block size, something where Bitcoin itself can be more sustainable as we go further into these happenings.
So do you think we break away from the 21 million number, and if transaction fees just won't be large enough to fund the security budget of the network, then you just continually print more Bitcoin? And if so, doesn't that kind of defeat the purpose of Bitcoin in the first place?
Yeah, it's a great question. I think there's two solutions that I've heard. One is lowering the block size so that transaction fees on a single transaction are higher, and so you can generate more fees that way. And another that I think I agree with, but I think a lot of Bitcoiners will disagree with, is, like you said, the 21 million cap. I think we'll need to have some inflation. I think small inflation, maybe 1% to 2%, something really small, but enough to sustain the network over time. But I don't know if I feel like Matt has opinions on this as well.
Yeah, I mean, I just want to say it's a fact that Bitcoin computational security can be secured by transaction fees alone. That's a fact. I'm not saying it will be, but it can be. That's 100% possible. It's not out of the question. It's maybe not likely, but it's definitely possible. I think that as L2s, specifically the Lightning Network on Bitcoin, get increased usage and increased capacity, it'll be easier to secure that base layer Bitcoin. And I guess I would just say that I think Bitcoin is good. I like the way it works. I like the way it looks. And you can call out Bitcoin people, and that's fine. But proof of work, Satoshi, the Bitcoin white paper, like this invented the whole industry. It's decentralized peer-to-peer money. It's as close to trust minimized as exists. Like when you look at trust minimization and you compare Bitcoin to Ethereum or Bitcoin to Uniswap, it's just, night and day. They're not the same. So I do definitely appreciate Bitcoin's value proposition.
So what happens if nothing happens, I guess is the question, right? If Bitcoin just stays Bitcoin, nothing changes, but transaction fees don't pick up either. And then let's say we fast forward 2 halvings from now. So I'm just like thinking aloud here, right? So miners would be losing their profits, and then eventually get to the point where there's so much hash rate on the network that the computational resources required to mine a new block are greater than the reward you would get for mining that block. And at that point, it would be unprofitably mining Bitcoin. So miners would start shutting off their rigs. Hash rate would start winding down. It would have to find a new equilibrium, but it'd be in like a perpetual downtrend at that point until it hit like a certain floor where like the transaction fees that currently exist on the network would be still offsetting the amount of revenue for the remaining miners. So basically what that does is lower the security. And at one point it would theoretically could be profitable to like attack the network at that point. So I don't know, like if it does nothing, it's in a downward trajectory, which a system based on like, trusting the currency, that wouldn't be a great trajectory path. So I don't know. I feel like something does need to be done, but the question is like, how do you solve a problem that you don't really know what the issue is, right? Like we don't know the level of demand will be for Bitcoin transactions if you fast forward, 6 or 7 years or 1 or 2 halvings. And so it's like, well, how do you try to fix the problem before it happens? It's a tough question to answer.
Yeah, and I'm not saying at all that there shouldn't be innovation in Bitcoin, that everything should be completely ignored. I just think that moving slow is a good way to do it. For instance, I do truly believe that if Ethereum proof of stake was successful for 20 or 30 years, that would then be something that the Bitcoin community would probably have to at least consider. But at the same time, like I don't think that's something the Bitcoin community should consider after 6 months of a successful proof of stake Ethereum. So I'm not under the camp of, oh, Bitcoin's perfect, there's nothing that should ever be changed. I'm just under the camp of that it's okay to move slow, that it's okay for it to work how it works today, and that there is no, like you said, sure, there could be a point where it becomes profitable to attack the network, but it also could not be. So I think that it's worth, thinking about and taking slowly versus maybe like moving fast. And it's kind of terrible to say that because it's not like Ethereum or Cosmos or anyone else moves fast, but yeah.
Yeah, if Bitcoin doesn't do anything, it's going to go to zero. I mean, the security model isn't sustainable as is. But I'm a huge believer in Bitcoin. I'd bet on human ingenuity and people who have been holding bags of Bitcoin to make a change, before it spirals out of control. You'd think they'd be able to put something together. I'm in the camp that lowering the block size to, purposefully increase transaction fees makes the most sense. But I mean, who knows? I just find Bitcoin super fascinating because it's really the only crypto asset that ties together real world, resources in the form of electricity in order to mine a block. So I think there's a huge value in that, and people from traditional finance can kind of wrap their head around that if they're really forward thinking. There's certain macroeconomists who I follow who I know are big Bitcoin endorsers. So I think that's super valuable. And I also just think that Bitcoin won the war of proof of work. Like at its peak, Ethereum still only had 3x the hash power of Doge. And if you put them on the same, axis, you can't even see Ethereum's proof of work hash power in relation to Bitcoin. So it's incredibly secure. And I think ASIC computational power will continue to get better. And with the difficulty adjustment, I think it's a pretty robust system. I'm bullish Bitcoin over the long term. I know most of us aren't here other than Matt and myself, but I think there's a place for it in the world, even if it's only 5 to 10% of the total crypto market cap in the future.
I guess the easiest solution, right, is okay, we'll increase demand and this kind of solves all your problems. But the issue with that is to increase demand, you have to be sending Bitcoin, right? And this is like why I think stablecoins are such a huge advantage on Ethereum is like I can pay Ethereum to send a stablecoin transaction, meaning I can pay, $1, let's say, to execute a transaction that sends millions and millions of dollars. Whereas on the Bitcoin network, I have to pay a small transaction fee, a couple cents, to execute a transaction that sends millions of dollars in Bitcoin. So it's like you want it to be this premier, like secure asset that is built for saving, yet it needs to be sent in order to like save the security design of the network. So I don't know. It's a really interesting issue to be solving.
All right, it's getting pretty long here. Already at about a minute or an hour and 15 minutes. So let's go to the last question of this end of year wrap up. I'd like to get everyone's one pick for 2023 of a sector that will outperform. Just one niche in crypto. I guess we'll start with Westy. I'll pick on you first.
All right, I gotta steal this before you do. ZK EVMs are definitely the sector I think will outperform. I'm super excited. A lot of them are in like later testnet, early mainnet, and I think in Q1 and Q2 we're gonna get mainnets of ZK EVMs. And yeah, I'm excited because they have really high potential, and each project is tackling the ZK EVM space a little differently. So I'm excited to see how that space evolves and competes with the optimistic rollups right now.
Totally agreed. I'm going to take liquid staking derivatives, LSDs. I think that, oh, wow, I must have stolen that from Dan based on his reaction. But I think that not everyone's going to have 32 Ethereum, especially presumably if Ethereum's price goes up, which I think is the assumption of most people listening to this podcast. So we will need liquid staking derivatives as a way that everyone can get access to that yield. Additionally, obviously, it gives the added benefit of capital efficiency. So whether it's Lido, Rocket Pool, one that doesn't exist yet, stake-wise, I have no idea. But I think liquid staking derivatives will outperform in the next cycle.
You did indeed steal mine, so that was painful to see. I totally agree with you. Liquid staking, they're poised to be sitting in a really important position in all of DeFi, and I definitely agree with that. But I'll go DEXs. I mean, obviously this isn't like unsurprising by any means, but I do think DEXs not named Uniswap stand to like gain a significant amount of I don't want to say necessarily market cap, but so Uniswap absolutely dominates DEX volume, and I don't think that will continue into perpetuity. I think it'll become a more fair market as newcomers enter the space and look to swap tokens. I think we'll see a shift to using aggregators rather than just like the DEX interfaces themselves. And there was a report that Delphi Digital put out not that long ago that showed that if you simulated every transaction that happened on Uni V3 in a Curve V2 pool, I think it was like 67% or so of the time, the Curve V2 pool actually threw a better price. And so it's pretty interesting that I feel like a lot of what Uniswap is today, it first of all, it is great tech, and it was like a first mover, and it did push the industry forward. This isn't like shade at Uniswap, but I just think that they are so dominant in the space that it's only natural to see more competition enter that space. And then you'll see different token design have a huge factor here, right? So Curve has kind of like dominated in a well-executed implementation of vote escrow tokenomics. You saw a balancer do something similar, and their trading volumes have increased as a percentage of the market, but they haven't had a perfect implementation of vote escrow tokenomics, right? So they've had some issues with governance and kind of had to work around working with some adversarial whales in their ecosystem. And then you see someone like Sushi who really fell behind in this race and for market volume, but is their governance forums are very happening these days. Their new head chef, or AKA CEO, Jared Gray, kind of came in and has really turned the ship around and is thinking about things like Runway, which maybe that hasn't been a priority in recent years. And you're going to see a new tokenomic implementation there, relatively shortly. That's going to look to think about how do you incentivize activity for the long run. So it's interesting to compare those models to something like Uniswap, which has really no token design. And even if they turn on this fee switch, I think that might hurt their trading revenue or their trading dominance rather than help it, although it will help their token on the other end. So I don't know, just kind of things I'm thinking about.
I'll go next. I think there's something to outperform in the gaming and interoperable NFT sector. And I don't know like what it is. I don't know if the project exists yet, but I think there will be like a mini cycle of some game. Either it's like really successful or it's just a really fun Ponzi. But either way, something's going to pop up. And I'm also going to take a bet and say that it's not on Ethereum.
I love it. That's a bold take, and also goes along with your alt L1 theme that you chose, that, you know, they will actually rise from the ashes. So respect there. I'm actually going to kind of copy you and start it, or end it how I started it. I'm going to go with NFTs as well. I think NFTs are culture. NFTs can be music. NFTs can be collectibles. They can be loyalty programs. I think they're the best use case outside of stablecoins that has popped up in crypto. And I think the use cases are still being uncovered. And I think 2023, we're going to see some Web2 companies like Starbucks, like Meta, like really gain some successful traction. And then I think we're all going to be listening back to this at the end of next year and be like, yeah, Moonbirds were at 7 ETH, like Bored Apes went all the way down to this. And we're all going to be like, we had another opportunity to grab OG blue chip NFT projects on the market for pretty cheap, and we didn't. And I know I won't buy one, but I think we'll regret it.
Strong agree.
All right, well, great. That was an awesome episode. Thanks, guys, for carving out like an hour and a half of your day. That went a little bit longer than we expected. Once again, thank you so much to our wonderful sponsors, Flipside and Chainalysis. We will be back after the holidays for another episode, so we'll look forward to seeing you guys then.